Hi, I'm Mike Capizzola from the Investing Channel, and welcome to Wall Street Connected, the show that highlights what Wall Street's finest are researching online. Today, we're taking a look at the NASDAQ-listed Riot blockchain, the Colorado-based Bitcoin mining company. According to Trackstar IQ, our proprietary search tracking tool, 75 institutional investors researched Riot 201 times over the past week, and it's not hard to work out why. The crypto collapse last week saw Bitcoin prices collapse to $30,000, and threw all things crypto under a microscope. And although Riot is in the Bitcoin business, its stock was relatively unmoved by the melee. Year to date, it is still up close to 50%, and it seems to have found some support on the daily 200 moving average. Recently, on Pros and Cons, we covered crypto mining stocks and how investors are starting to notice that miners have started to hold, and how undervalued these stocks are in relation to the crypto markets. Well, maybe perhaps before the crash, but the point is that when a Bitcoin is mined, there's no obligation to immediately sell, and if prices rebound, the miners look pretty well placed to capitalize. Furthermore, Riot's recent acquisition of Whinstone, the owner and operator of North America's largest Bitcoin hosting facility, is also expected to increase Riot's power efficiency and cost effectiveness in Bitcoin mining, and allow Riot to participate in a share of their competitors' profits through hosting fees charged. That's all we have time for today, but as usual, make sure you do your own due diligence before making any investment decisions. To find out more about our Trackstar IQ data, sign up for our free newsletter at investingchannel.com/Trackstar.